Thanks. Good morning. Glad to see you here. I'm glad traffic didn't keep everybody away. So thank you, Jesse, for compelling, inviting speech and sharing with us. The way in which this organization came together was certainly by those last few comments that Jesse made. But as the founder of the organization, I also know that before the 2015 time when it was formally organized and we had a board of directors, I did 2 or 3 years of one-on-one conversations with dozens of people, including some of you in this room. That's an example of, in addition to what Jesse said about leading and following, it's that one-on-one conversation issued in an organization like this. And so I invite you to continue that one-on-one conversation. There's going to be a time for you to ask questions of Jesse. But before we get to that, and I invite Cornell to join us here, Jesse and Cornell and I are going to give you some reflections, observations about the NCRC conference at the beginning of April. And as we do that, you can be thinking about what your questions might be for Jesse. And what we would like to do, because there's so many of us in the room, is that you talk at your table about the questions you might have and come up with maybe one question, maybe two, and there'll be a couple people with mics to talk about that. But first, Cornell, why don't you join us? And I think we're supposed to move this back. Yep. So the NCRC conference was 2 days in the first week of April. Some of us tramped around the day before that on Capitol Hill, making our voices heard. So the thing that comes to mind for me from that time together, the time on Capitol Hill, the 2 days of the conference, is, you know, when you have 11 or 1,200 people together talking about and learning about financial justice, to me, that's really compelling. There's not a lot of times in our daily life where we're doing that, but that was a time we all did that. And it wasn't all just a bunch of like-minded people. It was a broad section of folks from across the country, men and women, every race and ethnicity in the country, young and old. There were college students there. There were folks in their 70s, maybe even 80s, that were there, and everything in between. But we were all there for one purpose, and that was to build the coalition for financial justice and a just economy in this country. I'm wondering, Cornell, what's a observation that really caught you while you were there?
So there were a couple of observations for me. One is that, and full disclosure, I sit on the NCRC board and I'm the chair of the membership committee. And one of the things that struck me was that the conference got younger and younger. I've been going since 2015. And it was a pleasure to see all the youth that was in the house. As we did our after action review with the board members, as I stated in there, I'm not doing this forever. And it was important that I think that the youth attended. And I think that's a tribute to Jesse and his staff. As we get those who are slowly moving out of this space and been dedicating your life to doing this work, doing social impact work, and bringing those along, the youth along, in order to help make change. And that was one of the main things that I saw.
Mhm. Now, Jesse, I know that, you had a major speech. You were doing some interviews on stage, and probably you were taking some time away to write some thoughts down. But in the midst of all that, as you think back on that a month ago, what do you see? What do you remember?
I think the conference, and I've been doing the conference for a long time, this conference felt like perhaps the greatest culmination of an energy and a feeling that we've been trying to create for a long time. And it's not that we hadn't done this before, but when we think about building the membership, when we think about building power to address the kinds of problems that I mentioned, the affordable housing crisis in this country, the kinds of things that we need to do with that. We think about, that people really need both their mind fed, but also their soul. And the NCRC conference is really a unique combination of both. And so it may sound funny, but I don't just think about, oh, well, we had this great workshop on this thing, or we had this great policy conversation about another thing. We had all of that. We also had musical entertainment. It's a place to commune and to be with like-minded individuals, and the energy, it's really indescribable. I think the energy of the conference was what struck me the most. And within that energy, lots of thought-provoking conversations. I was really struck by, we had New York Times columnist Charles Blow, who's written a book called The Devil You Know. And it's fundamentally about his theory of change, which is to address racism in this country. He believes that Black people need to intentionally and strategically move back to the South and actually move into very specific communities with the explicit aim of building power in those places. And he himself has moved back to Atlanta, which his family left. It's essentially, he describes it as the reverse migration, the reverse of the Great Migration, in which, again, many Black people, it's always been ironic to me that the Great Migration is described as great because, in fact, it was forced migration. Many Black people were forced to leave the South because they were facing violence, harassment. There wasn't an opportunity to own land and to build wealth, and so people left. And I thought his book and his ideas, whether you agree with them or not, and he had historical evidence. I didn't realize this, but in fact, the fact that Vermont is today one of the most progressive states in the country didn't happen by accident. It turns out there was a movement of people who intentionally moved to Vermont with explicitly political aims and goals. And that is why you see the likes of Bernie Sanders and others coming out of Vermont today. It was very thought-provoking. And I think that's a specific example, but it's one that speaks to how we need to be thinking innovatively and differently about the problems that we face. We've been through a moment, George Floyd, lots of calls for racial equity, and yet when we look at the racial wealth divide, very little has changed. When we look at the challenges we're facing in community, I won't say we're losing ground, but in some cases we're losing ground, and the challenges are great. And so we need to think about and think deeply about how we actually will solve these problems. And that's practical. There were great ideas at the conference about how we do a better job of producing housing, and different ideas about creating ownership through alternative structures, community land trusts, co-ops, worker-owned co-ops, et cetera. But also, how do we politically create the kind of will that is needed to address those issues?
And to build on that with the Vermont example that Mr. Blow talks about, I mean, you can kind of assume this, but I'll be specific. It was white people that moved to Vermont. And so he's kind of saying, well, you know, if it can work for white people in Vermont, it can work for Black folks moving to Atlanta and other cities across the South. So it was a fascinating presentation on that. I wanted to comment on a detail, kind of, and that is one of the workshops that I was in was called Advancing Race Conscious Remedies in the Era of a Colorblind Supreme Court. And so what the presenters were talking about is we didn't get into this situation of a huge racial wealth gap and redlining and all the other things that we in this room all know about just because it kind of happened. It wasn't just, well, that's the way it works. Well, it's the way it works because it was designed to work that way. So therefore, if we're going to reverse that, if we're going to change that, set a new direction, the remedy also has to be race conscious. And they talked about ways in which that there are, in fact, legal ways to do that kind of race conscious shaping of policy, law, and behavior. That it was new to me, hadn't thought about it that way. Cornell, you had other thoughts.
So one of the things that we went back to this year that we hadn't done since the pandemic, because we couldn't, was Hill Day, where we spent a whole day up on the Hill talking to our leaders, talking to senators, talking to legislators about the needs of the CRA and the ideas that we push in the NCRC. So this was the first year we did it in person since before the pandemic, right? Yeah. So this was the first year we did it in person. We have been doing it via Zoom, but it's, as everyone knows, it's also well to do it in person. I'm a firm believer. I like to talk to people in person so you can actually see my face and see, because I just think it's a whole nother item to see me in person rather than to talk over a camera, over a phone. But we got to talk to several staff members, and the Florida delegation, all of them that we talked to were Republican. And some of them supported some of the ideas of NCRC or the agenda that we wanted to push. Some didn't, just based on who was pushing that or who was submitting that particular bill, just by the name on the bill. And it struck me that, okay, so wait a minute, you're against the bill just because of whose name is on, who initiated the bill. And it just goes to show you that a lot of things that are done on Capitol Hill have a lot to do with personalities, who likes whom and who dislikes whom, and that can be an issue. The other thing was, I was struck by, we went into one meeting in particular, and I never will forget this. We were in one meeting in particular, and we were talking about redlining, we were talking about CRA, and the staff member actually said to me, I don't think I told you this, Jesse, he actually said to me, what is redlining? So I had to explain to him first what was redlining, and then he asked what is CRA. And then I had to explain to him what the Community Reinvestment Act was. The group that was with me thought I was going to react differently than I did. Those of you in the room that know me know I can be, but the absence of the knowledge about CRA is what strikes me. That's the thing that we have to get better at. And I tell Jesse all the time, I always look to NCRC for guidance on how our organization can get better at showing what the community reinvestment is, what it actually does, and how it can help us achieve our goals inside our communities. I think that's important. It's important that the legislators know it as well, so they can vote on certain items in order to help CRA. I don't think nobody wants to see CRA used as a weapon. But in order to achieve a just economy, it can be, it is something that's gonna have to be adhered to. We're gonna have to follow the rule of law, and we have to learn how to use it. I tell the bankers when I meet the bankers, this is a two-way street. I'm not in this meeting to be adversarial. I'm not in this meeting to put it all on you. But I just want you to understand that we're also out here educating, that NCRC has helped me with that a great deal. Thanks to Jesse and his staff, I'm able to hold CRA 101 workshops where we talk about the basics of CRA. Working with the organization in order to get the name out there, but also to get the meaning of it out there. And I think at the conference, it was, you know, we harp on CRA and harp on CRA and harp on CRA. And it's because we want to make it better. That is, I think that's the real reason. As we stated earlier, it hasn't been any significant change since 1995. And this rule, although not everything we wanted, but we did get some things, and we hope for sure that all the participants, all of you have to learn about the Community Reinvestment Act in order to implement it. That all of you get educated, and all of you look at it as a tool in order to build a just economy.
Mhm. Okay. Did you have anything else to add, Jesse?
You know, one of the going back to what we were talking about a minute ago, I think one of the things that is so unsettling, and why I say we got to feed people's minds and their soul, is in some sense the situation we're in is again, going back to my analogy, the system is really designed to create the outcomes it produces. Well, part of what the system is currently designed to do, and this is not an accident, it's intentional, is to really create a lot of apathy and despair among people, to make people feel separate, to pit people against each other. And you can see this showing up in all kinds of ways. It shows up in media, in the social media that gets fed to our kids. But it turns out actually that in some cases, quite a small number of people can have a dramatic impact. I can tell you, I was talking with a bank CEO the other day, and he said, you know, I was in to do some meetings in Congress, and they were like, oh, NCRC was here last week, and they had all kinds of things that they said. So you can have the experience of you walk into a congressional office, they have no clue what you're talking about.
Yeah.
And yet it has an impact and it makes a difference, and yet it doesn't always feel that way.
Exactly.
And so what Charles Blow was describing is like, hey, a small number of people moving to a place can actually have a very large political impact when you break it down, because many political primaries are won by just thousands of votes.
Mhm.
The presidential election will likely be decided by about 50,000 votes in 5 states, which is to say about 250,000 people in a country of over 250 million. And so when you break these problems down, you actually can have an impact. But if you look at the problem as a whole, it's very easy to fall into despair. And there's nothing to be done, and to throw up your hands. And that, in fact, works in the favor of the people who would like the system to remain just as it is.
Right.
And you see a feeding of that. There's a very strong signal sent, I think, to each and every one of us. Hey, give up.
Yeah.
You know, give up on trying to help other people. Give up. You know, get for yourselves and don't worry about it. And that you know, that can lead very quickly to our demise.
Okay. Thank you, Jesse. Thank you, Cornell. It's time to begin talking with your colleagues at your table. If there's only 1 or 2 of you, feel free to join another table if you'd like. But talk together about what you've heard, what questions you have, and we'll take a little break here as well. So including with the break and time to talk at your table, we'll come back here a little bit early, about 10:45. We want to move this up a little bit. Jesse needs to leave earlier than expected, and so we're going to come back at about 10:45. The break room, of course, as you might know, is just to my right here. So glad you're here. Start creating your questions and take.
We have some book signings some books that have been signed by Ben, who's speaking this afternoon. And we also have 2 Miami Heat tickets to any game you want to go to next season. Looks like our season's gonna be over tonight. It hurts no one more than it hurts me, trust me. So, the winner of the 2 Miami Heat tickets with the most engagements on Hova is Magdalene Riveros. Where's Magdalene? Outstanding. So see me, and whatever game you choose to go to next year, even if it's Boston or the Lakers. Why anybody would want to see Boston, I don't know, but it is what it is. So if you'll see me, make sure you see me. I'll make sure I give you my card.
Done.
Okay?
11:10.
So we can make sure we get you the Heat tickets. All right, so I'm gonna turn it back over to Arden.
Thank you, Cornell. So we have 2 folks with mics over here and over here. If you have a question from your table, please raise your hand and one of these mics will arrive at your table. Here's back behind here. And let's try to keep the questions focused and short so we can get to as many as possible. There's a question back at this table back here. Yeah.
I'm coming. Here's what I asked. Here are the rules of the game. Please keep your questions short and concise. No history lessons today, okay?
This may be something you may or may not know since you don't live in Florida, the state of Florida. But how do you see the Live Local initiative that was passed last year for Florida and its impact on affordable housing in Florida, for the state of Florida? Are you aware of what that Live Local?
I know, but that doesn't mean I won't give you an answer.
Okay.
No, if someone were to describe it for you, I can tell you what I think of it, but I'm not familiar. So.
Yeah, if
I'm probably going to butcher this, but it basically cuts out a lot of the red tape that the cities and counties can control developers. So it allows for them, as long as they create a portion of new development, to have affordable housing units, they can get their projects done quicker. It also allows for some historic buildings to have things that maybe code issues, skirted around, as long as they can change some of their units to affordable housing. So it is impactful because it'll create affordable housing units within the denser populated areas.
so, any comment, Jeff?
I think the devil's in the details, but I think there are a lot of so you're probably better suited to tell me whether it's good or not. I think the nature of the problem, you've got a lot of local regulations that do create impediments to creating more housing generally and more affordable housing specifically. I think one of the challenges is, what's a good regulation and what's a bad regulation. There's many regulations that exist for a reason. From one person's perspective, they're red tape, they're bureaucracy, they're bad. From another person's perspective, they're an impediment, they're a cost. So I think you do have to think about sort of a carrot and a stick. I think you need to think about a lot of different options for producing affordable housing, giving those incentives and removing some barriers conceptually, I think is a very good thing. I also think, though, we need a much larger public investment in housing supply and the creation of affordable housing. So I think one thing I would just say is I think it's we need many solutions. It's sort of a yes and all of the above to solve those problems. But there's lots of where I live in Tacoma Park, for example, Tacoma Park, Maryland, Montgomery County, Maryland. I was mentioning, well, there's all these impediments to producing more housing, or really for building anything. And some of them were well intended. There's a rule that you can't cut down a tree that's more than 7 inches in diameter, because we love trees. And who doesn't love trees? And trees make the neighborhood beautiful and cooler and they absorb sunlight and carbon dioxide. It's well intended, but it has created more cost when you attempt to build anything because you got to mitigate, and in some cases you can't build because there's a tree that's more than 7 inches, and you get in this, it's used for NIMBY purposes. These kinds of things were well intended, but the way that they're practically used by citizens in the town is to prevent anything from going up. So I do think many of those things need to be eliminated or modified generally.
Okay, thank you. Next question. Yes, right here, Anthony.
Good morning, Jesse, and our great presentation, Jesse. And so, Jesse, you spoke about CRA reform and a new rule. And, you talked about the advent of the rule was really the digital evolution we've been going through the last 25 to 30 years, whether that's online banking, mobile banking, et cetera. But I also think one of the underpinnings of the rule is really to kind of close a racial wealth gap. And a lot of folks don't talk about that. When you look at the benchmarks and some of the metrics, I think it's driving that also. So I'd like you to speak a little bit about that.
Yeah, I mean, look, and this is a big problem. We know we have a problem. I talked about it in my speech. The wealth inequality is driving power inequality. I was critical of the rule for not doing more to address the racial wealth divide and not explicitly incorporating race. But it does do some things, most notably, so you can look at the last 14 banks who have settled with the Department of Justice for actual redlining, which is to say they weren't lending, many of them in Black communities, Latino communities, and 12 of them were getting passing grades on their CRA exam. Actually, 2 of them were getting outstanding. And some of them are smaller institutions. One of the things the rule does, CRA was allowing banks to sort of choose their assessment area within a metro area. And actually, several of those banks that settled for redlining had excluded census tracts that were majority minority, that were predominantly Black, I think in both instances, within a metropolitan area. Why? Well, because they didn't have branches there. So they said, well, we're going to exclude that from our assessment area. And the new rule makes it much more difficult to exclude a particular census tract within the metro area. And so that solves that problem. There are incentives and an encouragement to do things like special purpose credit programs, which is a legally allowable exemption to the Equal Credit Opportunity Act, which allows a bank to affirmatively target communities that have been historically underserved by the banking industry and to design special products and programs aimed at those communities. So there's an incentive for banks to put together, and many banks are doing this, have a special purpose credit program that allows them to, for example, do more down payment assistance for a loan in a majority minority community or to a minority borrower. And that that notably is, I think, could be a very powerful tool to address the racial wealth divide, to get more people into home ownership, which is the primary driver of wealth for most people in this country, is still home ownership. So I think those are 2 positive things. I wish they had done more. I wish they had made the framework more explicitly race-based as opposed to income-based. But those are 2 very positive things that they did do that will have a dent.
Thank you. Question over here.
Good morning. Will CRA partner with Florida State to make changes in legislation to reduce homeowners insurance, to make home ownership more affordable?
So the question is about homeowners insurance in Florida.
South Florida, correct?
Yeah, look, I will tell you that NCRC is starting to focus more on insurance. We have heard from our members, not just in Florida, but in many places, that this is becoming a problem. There are insurers who won't insure in California, for example. And it's not just property insurance. Home insurance is becoming an issue. We've also heard from some of our nonprofit partners that even things like directors and officers insurance for nonprofits is becoming more expensive or impossible to get. for a variety of reasons. One of them, by the way, is the threat of sort of cybersecurity threats that hackers are targeting businesses and nonprofits and governments, and then holding their information, their computer systems, et cetera, at ransom. So the short answer is yes, we're looking at this issue, and something has to be done. My suspicion on home property insurance is something will be done at the federal level to address it, and that could drive some change at the state level.
It's particularly acute here in Florida because, as you all know, most or all of the large homeowner insurance companies have left the state long ago. And so we're left with new startups, companies that have undercapitalized, companies that started last week, you know, that kind of thing. So it's particularly acute here.
It's another form of red line.
Another way of saying it. And in addition, here in Florida, you can't close a loan when there's a hurricane in the offing. And eventually, I'm quite sure there's going to be geographic areas where the insurers that are here will say, we're not going to insure if the house is in this particular geographic area that may flood regularly.
And the problem is that, I mean, this is expressing itself. Anthony just said it's another form of redlining. We call it blue lining. And the problem, of course, is that, you know, wealthier customers of insurance companies, et cetera, are in some way, shape, or form going to get protected. So the problem is it is disproportionately affecting lower and moderate income people. You have this challenge, though, like in some sense, the country needs to transition and to think about the very real climate risks that we're facing, the risk of sea rise, et cetera. And people tend to think of that as, oh, well, you know, that's wealthy people living on nice beaches. And the truth is there's a lot of poor people who live near coasts, and those are the communities that are likely not going to be helped. And so how we address that really important.
Yeah. Here. So let's if you could say your name and
Yes.
organization.
Yes, my name is Alberta Clean-Scales. I am with the Community Revitalization Alliance in Brevard County, which is the Palm Bay, Melbourne, Titusville metropolitan area. So the first question, thank you for the presentation. I've learned so much. I've been studying CRA for a long time, for a few years, and still have not been able to really access it well. So the first question is, where does our community find the identified assessment areas, or what the banks have identified as the assessment areas, the scorecards, and the metrics that are tracked for the banks that service our community? And the second, you want the second one?
Yeah, go
before?
ahead. Yeah.
And the second one is, what strategy would you recommend to help us get the CRA reps to a one-on-one conversation with the community to discuss the identified community needs?
Thank you. The first one, I have an answer, and the short answer is it's a little bit complicated. So one of the things that NCRC does for its members is help you navigate that. But there, you can go to one of the bank regulatory websites or the FFIEC. There's a page, ffiec.gov. And what you want to do is look for a bank's last CRA exam. And the CRA exam, when you open it up and read it, will actually tell you a number of things, including what the bank's current primary assessment areas are. It'll also tell you banks get a grade under CRA. They get an overall grade. But then they also get a grade on each one of the component tests, lending, investment, services. And then they also get a grade in each assessment area. And so you can find examples of banks that are getting an outstanding or satisfactory who are not getting that in a particular assessment area. So we can help you navigate that. In the new CRA, so that's sort of current CRA. In the new and forthcoming CRA, I'm not sure how it's going to work, and there's some work left to be done in implementation. It would be our hope to dramatically improve the process by which people can get exactly that kind of information. One of the big challenges, the bank regulatory agencies, there's 3 of them. depending on who regulates your bank, you might have to go to a different regulator's website. And then the websites were like built in the 1990s or early 2000s. And so they're not particularly great websites. So you need sort of a divining rod to figure out where you need to get what you need to get. But we do have, I would point you actually to our website as well, ncrc.org. There's a CRA 101 manual. It's a training manual that does have this information. How do you find that out? How do you figure that out? And then we would be happy to help as well. The second question was about sort of how do we sit down one-on-one with CRA officers. I think that was the gist of it, right?
Yeah. Yep.
Well, and this is where, first thing to do is find out who they are and ask to meet with them. And I would tell you, CRA officers in the room, shut your ears for this one. If they don't agree to meet with you, what you should do is write a letter on their CRA exam. And anybody can do that. The CRA, it's most effective if you do it right as they're being examined, which happens every 3 years. You wouldn't know that, but again, we can help you navigate that. But you can write a letter on a bank CRA exam at any time, and letters are best if you use data and speak to community needs, what's going on in your community, the problems you're trying to solve, et cetera. But something like, I've tried to meet with this bank CRA officer and they won't meet with me, I believe should be a consideration by the regulators, because in fact, CRA is supposed to incent and encourage banks to do robust community engagement, to listen to those community needs, to assess those community needs. So, the sort of first step is ask for a meeting. If you can't get a meeting on your own, again, a group is more powerful. A group of us would like to meet with you. If you can't get that meeting, sending in a letter is sort of the stick approach.
So now,
By the way, the CRA officers in the room know that.
so those of you that've had your ears closed, you can open them now. And I'll come back to Anthony in a moment, but I would say to any of you that it's very likely that Cornell already knows the CRA officer that you want to talk with.
Yes.
And you don't know how to go about that. Call Cornell. He'll help you find what you need to know.
So we have two last questions on.
Before we move there, Anthony, you want to make a comment?
Yes. So.
Is there, we have a microphone?
You can go to any of the lenders' bank's websites, CRA public file. It'll give you most of that information in one spot. And you can also write a letter directly to the regulator. You just have to know if they're regulated by the FDIC, OCC, or FRB, right? And typically, when a letter goes to the regulator, they call us, right, directly. And we're probably going to respond a lot faster.
Thank you. So we have time for two more questions. There was one right over here.
Good afternoon. No, it's morning time still, sorry.
Say your name and what organization.
Yep, I'm about to say,
Sure,
I'm
thank
Joyce O'Dong. I'm the Community Development Officer with Bank OZK.
Okay.
And my question is, when do we bring payday lenders to the table? They need to be regulated just like financial institutions, because their impact in our community is probably far worse than what we're doing.
Yeah, no, it's a real problem. And in many places, round of applause for that. Unfortunately, payday lenders are largely regulated at the state level, and there are campaigns in many places to cap the interest rates which they can charge. And so there are many states that have done exactly that, which has largely killed the payday lending industry in those states. Variety of different interest rate caps. A common one is 36% APR. For certain types of loans. New York State sets it even lower. I think it's 10%. And so that's one thing. And there is a federal bill to do that as well. you know, part of the odd legacy of banking regulation, financial services regulation is we set up regulatory frameworks that were based on the nature of a charter of the institution as opposed to based on the activity that they make. So we don't have a regulator that regulates anybody and everybody who does lending. The CFPB sort of does that, has some powers and authorities. If there are particularly abusive companies, there are ways to flag that for the CFPB if they're breaking the law in what they do. But the problem is, in many states, the law permits them to do what they do, and they're regulated at the state level. So, you know, there are a number of our partners, Center for Responsible Lending, the Consumer Federation of America, Americans for Financial Reform, and us have worked to both outlaw payday lenders and to regulate them more stringently.
Okay.
So we have one over here, but I want to address that. We just, the Community Investment Alliance of Florida just signed on a amicus brief with Democracy Freedom. They're filing here in South Florida, Miami-Dade County, for 1071 is coming out in order to empower the banks to do reporting. The merchant creditors, who I consider the payday lenders of business, of small business, want to be excluded from having to report who they loan to, when they loan to them, and so on. And we, the Community Investment Alliance of Florida, has entered into a meeting or an amicus brief to fight that particular thing. So not only does it affect the payday loans, do affect us personally, but it also affects the small businesses. And I have the last question.
Good morning, Marcia Barry Smith, Chair of the Broward Housing Council. Thank you. Thanks. Real quickly. Currently, a CRA qualified loan means that the borrower earns at or below 80% of the area median income. However, it is not based on the HUD guidelines, which allows for household size and increases that income. It applies for subsidy, but not for loans. Oftentimes, these are workforce people who really and truly are low to moderate income. They just happen to earn more, but their households and their expenses are more. Is there any move at all towards considering using the HUD guidelines based on household size, or are we stuck forever at 18% AMI? Thank you.
It's a great question. And I do agree. I mean, part of the problem in developing a national standard is how you tailor it. I don't believe the new rule does that, but these conversations do come up from time to time. And certainly something we'd be willing to look into and to work on. And yeah, I think, you know, things need to be tailored. One of the worries is quite often you generally get a push to say, well, let's take the income limits up to 120, or let's cover workforce housing. And the problem, of course, is it is a finite universe of activity. And if you do that, then all of the activity will go to workforce housing, and none of it will go to low and moderate income people. And so you've just sort of moved the capital around and created different problems when you do that. So I don't have a great solution to that. I do think it should be tailored to size of household and to some local conditions. By the way, there's also places where the place is so low income that 80% of AMI is really still low income relative to every other place in the country, and that's a real problem too, particularly in some rural communities that needs to be addressed.
Thank you. If you did not get to your question, please write it down and we will answer it on the website. Please let's give a hand to Jesse Van Tol, CEO of NCRC. Thank you so much, Jesse. You always support us. We greatly appreciate it.
Thank you.
Safe travels. We're going to get him to the airport like now.
Okay, thanks, Jesse.